Alright traders, I'm back again with another video, and today I'm going to take a quick moment to show you a trade that I'm in. It's going to be the Aussie yen 4-hour time frame, and I'm going to show you how I got into that trade and what I did, and also I'm going to show you why listening to Ichimoku systems signals are vital. Okay, because I could have had the same exact trade on another pair, but I didn't get all the signals yet, and that trade wouldn't have worked out. So let's jump into it. This is the Aussie yen 4-hour time frame, and quickly you can see I'm in a trade right here. This is where I entered the trade, and at the time I had my stop loss down below this Kijin Sen. Okay, so I waited for this candle to close. Now I could have entered here. I could have put an entry order here on the bottom of this doji right here, this little hammer. I could have put an entry order at the top of this level here, but I waited for this candle to close, and when that candle closed, it was a bullish engulfing candle. Okay, it engulfed this whole candle right here, even the second candle back, not really counting this doji here, but this little hammer back here, it engulfed that whole thing. So we call this a bullish engulfing candle. Entered on that close here, put the stop loss a little below the Kijin Sen level. All right, and then from there price continued upwards, and we're still moving up. You can see I'm in profit for 59 pips. Now there's no need for me to get out of this trade. I'm looking at possibly looking at this level up here where we may have a double top, and then the other way that I'll get out is if we get a close below the Kijin Sen again. All right, but I moved my stop loss from down here all the way up here. So here's my entry level, and now I'm above break even, so I'll make something on this at least. We want to see this continue. I hope this resistance level, which is now going to be support, if this candle closes above that, hopefully that level will hold, and we can have that as a support level and allow price to continue upwards, and then move my stop up even higher. Okay, so that's what I'm looking at. There's a way I got into here, like I told you, with the bullish engulfing candle, and there's a lot of other things that I look for. Some price action trading off of the Ichimoku systems. You know, there's some things you could have looked here. This was a bounce off of the Kumo, off of the Kijin Sen. It hit the Kijin Sen here, it bounced off of the Kumo here, so you had a lot of support right here based off of the Ichimoku system, and price bounced off of that level. That's what I was looking for these levels to hold, especially this Kijin Sen level. I really love to play the level there for support and resistance because it's so much of an equilibrium effect with the market. And price bounced off of that level, and it took off, and there it goes. And like I said, it's much, the Kijin Sen is an equilibrium, pretty much equilibrium effect on the market, and this is, once price gets too far away from this level, it'll start to draw it back, because this is going to be the average of price, the average level of price for the past 26 periods. Okay, so looking at that for the past 26 periods, if that's the average of price, price is going to eventually come back to its average, which will be the equilibrium. So that's how it's pulled back to that level. All right, but we're going to watch this trade and let it go. All right, so then the euro yen had the same thing here. There was a bullish engulfing candle, and this was really nice here. You had your crossover, you had every signal was bearish, every signal was bullish, and we were taking a long trade. You had a bullish engulfing candle here, which engulfed this previous candle. We had a close above the Kumo, and you had a Kumo twist that was, at the time, it wasn't bearish. I mean, it wasn't bullish, it was still bearish. So we go here and we go over 26 periods. So right here it was still just getting ready to twist, and then on this candle here it did twist. Now this would have been the good entry point right here, with your stop loss below the Kijin Sen here. All right, and you could see what price is doing. You had all bullish signals on the Ichimoku system. So that's another example of a bullish engulfing pattern at the support level or resistance level, and that's what I look for. And that resistance level, we had a bullish engulfing that took us right through the resistance level of the Kumo cloud. Okay, so that would have been a trade to look at there. On my trade here that I entered, we had a bullish engulfing off of the support level of the cloud of the Kijin Sen, either or, because they were so much in sync with each other there. All right, so euro yen, that's what this was right here. So you could see we had a break of the resistance level, and prices continuing to move upwards. So let's go to the US dollar yen. Looking at the US dollar yen, we had support, we had this level hold support at the Kumo, and then we had a bullish engulfing pattern right here. And now if we would have entered this on this trade right here, we had our Kumo twist, right? So we had a twist that was bullish, and that happened right here, right? So you saw that beforehand, and then where was Chiku span? Chiku span was below price, so that's bearish. You didn't want to be in this trade, and also you had a crossover, a TK crossover here that was bearish. So this trade wasn't looking good for you, and uh, yeah, you had all bearish signals besides price being above the clouds. So you want to wait to get all your signals, and by the time that happened, that's way up here, and that's where Chiku span busted above this price realm. And I don't like to be getting too far away from Chiku span. I want to be somewhere where I don't like to be getting too far away from Kijinsen, sorry. When I get into a trade, I want to be able to put my stop loss at that level. So if I get too far away from it, I don't want to make my stop loss that big. So this would have been a trade I don't even enter. So now just wait for the market to get back to equilibrium with this. This was a trade that I missed out, not missed out, but wouldn't have taken. You had to break the, you had this bearish engulfing pattern here. It would have stopped you out, because look at, if you had it here and you put your stop loss down here, now the only way you would have been safe is to put it way down here, and there would have been no thought of putting it down there. I would have put it below this candle, the bullish engulfing candle that I had, and look what the market did. It came back and stopped you out. Depending on how far down you had it, you may have just made it, but you could see what happens. The market knows, and it came and searched for you and got you if you were there. And then you had another bullish engulfing right here, another one right here, and again, depending on where you put your stop loss, if I put mine a little under that candle or a little under the cloud right there, the market came down and got me again. So that would have been two losses there, because you're not listening to the Ichimoku system and what it's telling you. So now you get this breakout above this equilibrium. Now you know that the market is bullish for the past 26 periods average, okay? But below this level we're bearish. So if you're below that level, you don't want to be taking a trade, because this is a bearish signal that the market's been bearish for the past 26 periods basically. Now the average, it's back over that level right here. So that tells you quickly what the mood of the market is, really quick. All right, but that's it, traders. That's all I'm looking at. That's all I wanted to show you guys, a quick synopsis of looking at your Ichimoku system and following the rules and paying attention to them. All right, so I'll be back with something again, and until next time, traders, God bless. So long.